Hello and welcome to Pro Trader Strategies market commentary for Monday, May the 4th. Yes, it is a casual Monday. Why? Well, my water heater went out, so sell short on water heaters. Actually go long because I'm going to be in the buying pattern probably here pretty soon. Anyway, you guys might recognize me as the Wolfman from mainstream media, where I've talked about economic and geopolitical environments and then how that impacts the overall market analysis. Well, I do that same stuff in these daily market commentaries, but I layer on top of it some option strategies that we can use on a daily basis to lower our overall cost basis, maybe on a stock, or just take advantage of a market assumption we come up with from that analysis we get from the economic data, the geopolitical environments, or just technical analysis with the overall markets. All right, without further ado, let's talk about that economic data. It being a Monday, we don't get a whole lot, but we did get some manufacturing PMIs out of the European region. It's not the main ones they look at flash, but they all came in pretty much in line with expectations. So not a whole lot really to see there. Nothing really knocking it out of the park to really change what our viewpoint is on the overall economy going forward. Here in the United States, though, we did get factory orders, and that came in at negative 10.3%, expected to be a negative 9.2%. All right, so that, is that what's causing the overall markets to come off? No. What the real news is that Warren Buffett on Saturday at his investor meeting came out and said that they dumped all of the airline stocks. So that is causing the markets to come off a little bit. We're going to have to see, because we've got Ohio and Georgia opening up, so we're going to see if we start seeing some COVID spikes there with the economy starting to come back online. Other states are still holding off going forward. The other thing to look at was the Disney somebody came out and said that Disney was a hold now, and that they have earnings tonight, so we're going to really have to see how that all works out. I'll talk about my Disney trade here in a little bit, but let's get through the overall markets. We've got crude oil moving back into the 20s. That is a good sign for at least the United States. We're trying to find a bottom here, and anything below this 20 handle, for sure, nobody is making money. As a matter of fact, I don't even think the Middle East makes money on crude oil much below 30. So nobody's really making a whole lot of money. We're seeing a lot of the United States oil companies slow down on production, basically not quite capping it off, but basically shutting down a lot of those operations to a point of not really producing. So crude oil, going to see some limited supply coming into the markets. We're going to get some data later on this week on that, but there's still no demand out there. I mean, we've only got a couple of states really opening up, and that's not really going to start driving demand at this point. All right, we've got gold futures moving higher by about $11. I talked about this on Friday and basically most of last week. I think that 1700 handle is where the market is going to try and stay at least above. The bulls are going to defend that area. Now, a lot of that's going to do with it is a safe haven asset against, say, currencies and things of that nature. Even the equities, people start putting money into that gold in order to preserve some capital and just get rid of some of that volatility that they're seeing in their account. All right, we've got the 10-year notes right here. They are up slightly, and that's just because I was doing some research earlier. But let's look at the bonds and see what we're dealing with there. Still holding on to that 180 handle. We're up a couple of ticks on the day. Yes, this looks like a red candle, making it look like it's a little bit lower on the day, but remember, that's the overnight trade as well. We opened up a lot higher in the bonds because of Warren Buffett's news conference and basically saying he was dumping the airline stocks. That caused a spike overnight in bonds as the equities were down much lower than they are, at least right now. and these bonds coming off, but I think that they are going to hold on to that 180 handle, as I've talked about it before. That's where the Fed starts coming in and really supporting that market. VIX is moving a little bit higher today, albeit it is off of the highs that we saw created overnight because of the equity sell-off. You can see the Dow Jones is in negative territory by 200 points, just sitting above that 50-day moving average right here. That market opened up obviously much lower, and that was based on a lot of Warren Buffett's guidance on these airline stocks. Now, NASDAQ is in positive territory. That's because that's the tech sector, right? We're not having to worry about the airlines over there in the NASDAQ or the QQQs, which is the ETF for the NASDAQ. We are seeing this market start to move higher. A lot of these tech companies are doing very well in this type of environment. So there's always a silver lining somewhere, I guess. And we've got the E-mini S&Ps trying to get up into positive territory, just slightly off by about 13, 14 points on the day, but near session highs anyway. As we're talking, market again opened up much lower based on Warren Buffett's talk. You can see here we had those highs, and we are in this candle right now, so a bit of profit taking going on. This is where we kind of opened up much lower, and that's because on Saturday, which we aren't trading on Saturday, opened up and much lower based on Warren Buffett's guidance on the airline stocks. All right, without further ado, and while the dogs are going to disrupt this entire video, I'm going to talk about Disney. Remember Disney, back in December, I did a synthetic long in Disney, and that was on the expectations that I think that their streaming was going to add a lot of new income. Well, obviously that was before this whole coronavirus thing happened, and that market fell out of bed. So I had done these synthetic longs on the 145 synthetic longs. So basically I'm short the 145 puts, long the 145 calls. Well, those short puts got put to me, so I got long at 145. Well, I immediately went out there and started doing covered call strategies. I sold the the January 160 calls in there for about 50 cents, and then I rolled that out in time to sell the February 160 calls, collected another dollar for that. So I'm at around, rolled that out for 89 cents. So I got the 50 cents on the original 160s, rolled it out by buying back the Jan, rolling it into the Feb, collected another 89 cents on there. So I'm looking at about $1.40 that I've lowered my overall cost basis on that trade from, right? So for 145, $1.40, lowering that cost basis there. Then again, I rolled again when the market started coming off from those 160 calls. I sold some 160 calls again. The February 160 calls I bought back for 16 cents. All right, and then sold some 160 calls for 58 cents. The market really started selling off, and that was right around February 6th-ish. So the market really started to get a little bit weaker here. Got a little bit more aggressive with those. Had to sell some 145 calls on the 24th, which was this first drop here. Got that drop, sold some 145 calls, had my total position covered at that point on covered call strategies, covered the entire position there. Collected another 54 cents. Bought those each back a little bit later for about 20 cents. So I decided to flip my position, try and do some dollar cost averaging, and went into the March, sold the 110 puts. Now we can see those 110 puts got put to me because I sold those on the 27th of February. Sold the February 110 puts. They got put to me at the end of this cycle. Let that happen. So now I added to my position, all right? Added to that position and started getting a little bit more aggressive by selling the the May 130 calls in there. Sold those for 50 cents. Rolled those out to the June 130 calls, collected another 40 cents there. And then I just recently, or I did that today, rolled out the May to the June for 40 cents on those trades there. So lowering my overall cost basis, lowered it by a little bit better than $3, as you can see from all of those collections of credit. And now I'm going to ride this through this earnings and continue to do the same thing. Stay mechanical, continue to lower my overall cost basis on it. If you think about it, I'm long at 145 and 110, so my break even is somewhere right around 127-ish, right? 125 with all the lower of that cost basis there, just slightly below 125 is my break even. Yes, it is still a loser at this point, but we are just trying to stay mechanical with this trade and move forward. And that's all I've got for you guys today. Hope everybody had a great weekend. We're going to be having a really busy week this week. I'm doing 3 different webinars, one with extreme market conditions. I'm also going to be going out there with Dave Mecklenburg and doing his webinar tomorrow, so check all of those out. You can find it out on Pro Trader Strategies and get those links if you want to check out some great webinars during your quarantine and learn how to trade some options and or just do some market analysis. There's going to be all kinds of great speakers at these events. All right, so that's all I got for you guys. We got to go over one other thing. Please take a moment to go over this disclaimer, as we are an educational company, and past performance of any trading system or methodology is not necessarily indicative of future results. All right, if you can't take that, take it easy.